Well, good evening, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up. Meltdown day, right? That's what it is. And today is March 6th, 2025. All you need to do is look behind me, and you can see how the stock indices let go again. You had a little green on. Energy came back a little bit, up 26 cents. XLP gave you a little bit of a bid through here. You got to search high and low on this board to find another one. I have XLP twice. I didn't realize that. I'm going to get rid of it. You know, when you look at 30 some odd quotes or whatever, it gets you dizzy. But most markets down. It was a super confusing day. Of course, we saw all the tariffs go on from President Trump. And today, if you're watching early in the morning, and I was, and tomorrow, by the way, Treasury Secretary BETZ is going to appear, I think, at Chicago time, 6 in the morning on CNBC. So you're going to want to see what that one does. But I was watching this morning Howard Lutnick, and he was very clear the president was really going to do some rolling back. And we had a lot. The president did roll back. You have to understand USMCA. So for those of you that do get my newsletter, in the newsletter, I go through USMCA, all the restrictions again in it, what it requires, and those were, again, abandoned. So tariffs on that for Mexico and Canada, thrown out. They can come back with the reciprocal part on the 2nd of April or later, as the president desires. Number two, items that aren't in USMCA, those tariffs are going to exist, all right? So you've got to understand what the president was saying, where they're at. Now, Ms. Scheinbaum says that Mexico doesn't tariff U.S. goods. I don't know that that's true or not true, but if she's right, and if those goods aren't tariffed, then there's no need for us to tariff anything they've got. You know that's very different in Canada. Lumber, milk, I can go on and on, all the darn things that are done here that are all done in one way or the other to protect parts of their markets. You just got to understand what it is. You have to understand that what's going to be with the energy markets, because I don't think they're exempt from the USMCA. I think we're still going to have the 10% tariffs on those. We saw that Doug Ford in Ontario, Canada, said that, I'm sorry, guys, but I'm putting the 25% tariff on our oil right now. And until you take off your tariffs, New York, Minnesota, Michigan, where our energy, our electricity goes to, it's going to get a 25% tariff. So there's pushback, and you would expect that. And there's insults against the Canadians that have been very dragged out. And I, for one, I love Canada, so you're not going to have me say that at all. All right. And I have been in most parts of Canada. Lower highs, lower lows in PANW. So before I go in any further, I got a request from you, and then I'm going to bring up the news. What should we replace this with? Write me tonight, put it on my Facebook page, if you will. YouTube is what you're going to look at it, really. Do it on the YouTube, and tell me what you'd like, and I'll review them. Before I go here, let's take a look at what we're going to get in the morning, because it is a big morning. We're going to get the non-farm payroll. Normally, I don't show you the numbers. I'll talk about them. The consensus is 170,000 new jobs compared to the 143 that we saw last month. The jobless rate's expected to stay unchanged at 4%. Average hourly earnings, unfortunately, still climbing. I'm sure the Fed would like to see that not climb. The Federal Reserve then at the end of the day, 2 o'clock, is going to release consumer credit data. Now they're looking for an increase of $14.5 billion, but that's way under the increase that we saw in December of $40.8 billion. So got to put that together. Very important as I see it. So almost everything in tech is getting hit. And it's just the way that it is right now. Nothing goes up forever. The bigger question is, have we seen important tops? And probably, yes, you have seen important tops. Have we entered bear market territory? On a number of them, you have. Is this a place to pick up some of them? For certain, there'll be people that want to pick them up. They're going to look and say, I don't care what a chart looks like. I want to own this one. I want to own that one, and I'm putting them away. I don't think I'll get the advantage to do this. And if I buy them here, I'll buy a little lower again. There's nothing wrong with that type of thinking for investing. For trading, that is not what you want to do. When you're looking at PANW, you're in a bear phase. In order to take that out, you've got to get back over 185.27 to negate the bearishness in the market. The market might be headed back down now to the 200-day moving average in gray of 177.10. It's not far away. It's $2.13. And when you look at where the Bollinger Band is, that's at 177.34. So you've got a pretty good combination of support coming in under the market. Not something that I personally would tell a trader to push back against. So I'm expecting some short covering if it reaches down there. The market's also oversold and without an embedded reading. I wouldn't say that if you had the embedded reading. You don't at this point. In Dutch Brothers, were we not just saying you might want to reach down to the Bollinger Band? Seems to be what the market is doing. This trade ended right here when you took that out. That ended the bullishness in the market. And another phase was when you lost the bearish reading. You got it back. When you lost it the second time, I said bearish, bullish embedded readings. Today I'm tongue-tied. It came down and away you go. I'm so glad I did my big report yesterday. And by the way, I hope you all looked at that report where I talked about urgent. I think Trump has engineered a downturn in the market to get many of his policies passed, and I think that is what's going on. And I don't think he wants this to last a long time, but it's got to happen. He's got to make the tariffs happen. He's got to stop these let's call them trade wars the tariffs cost, the unfairness to America, in his opinion, that we're seeing. He's broken the value of the dollar. He is breaking interest rates that he wanted. Energy prices are down. Give him credit. A lot of the things that he said he would do, he did. If you can't get away from that. I gave Biden credit. Remember I said he's probably the greatest oil trader I saw. He did a phenomenal job. And notice there's absolutely no talk by the Trump people to buy back for strategic oil reserves. So far, none. Not a bad play. Let's see how far down it goes. CrowdStrike, look at, you're running the Bollinger Band. I think that the 333.54 is going to be an important number. You're already at one. You're at the 100-day average in the Bollinger Band. You don't have to extend down here. You're already in oversold territory, but if it does, that's the next zone that I'd be looking at for short covering. As you know, I'm keeping you away from Rivian right now. I've given you all the reasons. I won't repeat, and it's got an embedded reading. You could easily go down to the 1031 level. To get me thinking the market has a shot at a good bounce, you have to get the red line here, which closed at 9 to close over 21. In China, you don't want to be bearish right now. Remember what I've said. Their Congress, their conclave is the right word that I'm using now. They are meeting. You're getting each day a little more detail on how they're going to go about doing whatever they're going to do. They have braced themselves for a tariff war with the United States, and they're going to live through it. Remember, time is always on their side. It's part of the culture, and that's how they're going to play this. Are they turning their economy a different way? They are trying. They want to make their consumer spend. I don't know how you do that until you get the confidence of the consumer that the property market's going to stabilize. What they are spending on is AI. Did you see Alibaba today? Again, they are saying that they leave DeepSeek in its dust. They have created now another piece of software that does more than DeepSeek, doesn't use anywhere near the resources according to them. And you're going to keep seeing this. I want to keep seeing this. And while people think that's bearish NVIDIA, it's not. At the end of the day, if those pieces of software can do it, what can they do with these monster chips that are available? Because at the end of the day, what AI is all about is eating up data. The faster it can eat it, the faster it can come up with solutions that the programmers write in, the training and all the other parts. Understand that. On the close today, you lost the bearish embedded reading. Unless it re-embeds tomorrow, before the market goes under this low, I am looking for price and the 18-day average to come together. XHB did the same identical thing today. Tesla, look at how far down this has gone. At what point is Elon Musk going to cry uncle and say, you know, this is a little too painful what I'm doing? I've seen my stock go from 470 and tonight we're down to 263. I don't know what his threshold of pain is, but people are giving it to him and they're trying to hurt him in that. In XLF, higher high, lower low. We'll see what happens through here. You're oversold. I don't know what to do with the financials. This is not a tradable chart, bullish or bearish. I see nothing to do there from my perspective. On the industrial sector, slipping back, now you're down again to where the market found or tried to find support earlier in the week. The combination of the 200-day average and the Bollinger Band in an oversold market. You'll know something's turning if you were to take out yesterday's high in the 134.40s. That would be, to me, a key that maybe the market can give you a bounce into the 136 area. I see nothing to turn the chart around just yet. Energy prices getting beaten up. They've just come out of the sideways action. I didn't get what I call a breakout pattern. That would have been you close back here right at the lows, basically, of the market, and yesterday do the same. Lower low and right at the bottom. You didn't do that. So fighting the battle at the lower Bollinger Band, I get, but this is all now looks like a top in the market, if you will. In the gold market, you have gone to sleep at the 18-day average. You don't have a tradable pattern. You have a higher high, lower low. And I would have thought in a situation where the stock market's cratering, the dollar's cratering, you've got trade wars on the horizon here, you're not certain what to do, that gold would have moved a lot higher than it has recently gone. Those are the scenarios it normally does. It didn't happen. The silver market's come alive because of China, and the pattern is higher lows, higher highs. This chart is substantially more bullish than the silver futures chart. They don't look the same. This market probably still looking for support at 29.26 before all is said and done. In the copper market, no trend. All you did is run back up here. But if you go to the copper futures, it looks totally different than this. It shot up in an uptrend to the upper Bollinger Band. So the two aren't really as tied together as you might think, and I always look at the two. In BND, you have fallen back to the beginning of the support now. First is the 200-day average. You often hear me say, I don't like if I have a buy signal to buy the first move over a 200-day average. Admittedly, it went higher up than I thought it would, but more times than not, this is the pattern that develops from that. You've lost the bullish embedded reading, but this was the target to come back to. It's not the 18-day average. That could be for good measure, but this is all that it should have come back to, and now it's like the game starts fresh as far as I'm concerned. The dollar in a washout phase under the Bollinger Band and going up and probably trying to get overdone in the FXE. Be very careful. I, for one, would not tell you buy the FXE up here or sell the dollar as that big of a break. Now, there are other ways that you can look to see if markets are overdone one way or the other. I don't know if you've ever heard of the Arun indicator, but it's a measurement of price and time. I created for you a two-part video series. You probably have this indicator in your charting software, and I teach you how I interpret using it if you want to see the crossovers and how this works. Just go to iraepstein.com, look in the free offers. You'll see the Arun indicator, choose it, and we'll get this to you. There'll be a cursor at the top here you can hit as well. That'll take you right to free offers. I'm Ira. Let's talk in the morning when we see how the jobs numbers looks. You have yourself a great evening. Take care.